very good morning and a happy Friday. Welcome to today's episode of Morning Well. If you find this podcast useful, please do hit the like, comment or subscribe button on the platforms you use to listen to this. Three things that we will talk about: bill blocked by Democrats, Lagarde's comments, and US-China tensions poll. The Dow Jones plunged 400 points while the S&P and Nasdaq ended 2% lower on Thursday as heavyweight tech-related stocks slid amid lingering worries over heady valuations. Sentiment took a further hit after the Senate failed again to pass the coronavirus relief package. This was the fifth to soften the economic blow from the pandemic itself. Energy shares plunged as oil dropped back towards $37. Yields were down 2 basis points. The 10-year Treasury traded at about 0.68. Senate Democrats blocked a narrowly tailored pandemic relief plan proposed by the Republicans, contending the measure was too meager a response given the damage that COVID-19 continues to wreak on the US economy. The Senate's 52-47 vote in favor of the bill was short of the 60 needed to advance the legislation for a floor debate. Estimated a roughly $500 billion to $700 billion, the package was less than the Republicans' own $1 trillion plan that they were talking about since July, and is intended to target the most pressing areas for health, like revived supplemental unemployment insurance benefits and extending aid for small businesses. The bill is a fraction of the $2.2 trillion backed by the Democrats. So this standoff continues. I see no end at sight given that the elections are coming through, and I think the Republicans are kind of playing it safe while the Democrats want to do the maximum possible. The number of Americans filing for new jobless benefits unexpectedly failed to fall back last week, coming in at about 884K, the same as prior week's revised figure. Consensus was for a decline to 850K. Louisiana and Virginia saw biggest jumps in claims. Continuing claims also disappointed, rising to about 13.4 million from 13.3 million. Yesterday was ECB and we were all looking forward to what Ms. Lagarde was saying. So Christine Lagarde said Euro area manufacturing continued to improve and economic data suggests a strong rebound. Still, she said ample stimulus is needed and uncertainty is elevated. The ECB kept policy on hold, much as what we were expecting. The central bank tempered its forecast for economic contraction this year to -8 from a June forecast of -8.7. But the bounce back next year will be 5% and not the 5.2 previously forecasted. Headline inflation will remain negative in coming months and turn positive early next year. I'll talk about how this impacted the euro a bit later. Peloton jumped in late trading after quarterly sales of 607 million top consensus as stay-at-home orders and gym closures continue to spur purchases of its equipment and subscriptions. Oracle also gained as revenue beat expectations on demand for cloud services. Tensions between Washington and Beijing continue to loom over markets. More than 70% of US companies polled by the American Chamber of Commerce in Shanghai expect geopolitical turbulence to create operational difficulties for them over the next 3 to 5 years. This is up sharply. Earlier last year, in the same poll, roughly half of them had the same opinion. Now it has gone up all the way to 70%. So that was interesting to note. On the FX side, Euro soared above 1.19 on the back of ECB's monetary policy announcement. ECB was less dovish than anticipated, but the single currency failed to hold onto its gains as Brexit risk mounted and US stocks staged an early reversal. Central Bank President Lagarde was far more nonchalant than investors feared as she urged the market not to overreact to euro gains. She admitted that the euro was discussed, but they do not target the exchange rate and instead watches its effect on inflation. Unlike euro, which still ended the day up against the greenback, sterling sold off sharply. In the last 7 trading days, GBP against US dollar has dropped about 600 points, while the euro GBP rose more than 300. It's looking more and more like Prime Minister Boris Johnson will push for a hard Brexit. The government refuses to withdraw their internal market bill, which the European Union argues breaches their agreement. They've given Johnson to end of month to amend the bill. That's the update. Stay safe and healthy. Have a lovely weekend, and I'll speak to you on Monday. Thank you.